Hey, what's up, you guys? Good morning. I hope everyone is doing well. Today is Wednesday, the 18th of September, and the time is now 10:52 a.m. Now, I'm going to be doing a voiceover of my live recording earlier this morning. So I did catch a trade and I did live recording, but I just didn't have the audio. I was out, so I just brought my laptop and I did a screen recording. So I'm going to play my live recording as you can see on the screen, and I will make commentary as we go. Okay. Excuse me. Right, you can see up the top here. I'm not sure you can see it's 8:17. It's PM my time, but it's 8:17 a.m. New York time. And you see the time is ticking down now. Right. We are on the hourly chart. US30 Dow Jones, 42 minutes away from the 8 a.m. candle closing. Excuse me. Yeah, so I drew a 1 hour resistance up there, and also 1 hour support down here, and a bigger, stronger 1 hour resistance and support, which by memory I think it coincides with the 4 hour resistance and 4 hour supports down here as well. So that was yesterday, the all-time high. You don't worry about that. I made a mistake. I said price has been bullish last week, and yesterday it was supposed to be Tuesday. Price hit all-time high. Right, we are now 41 minutes away from this 8 a.m. candle closing. So when I see where price is, and when I see the resistance and the supports, I see there are two potential scenarios that could play out. Right, so the first one being if price is being held in this 1 hour range. Yeah, so if this 1 hour support actually holding price right inside this 1 hour range. All right, so this is the scenario number one. So I typed in this 1 hour support. Let me just pause this. This 1 hour support is holding price inside the 1 hour range, and it provides internal breakout play, which means that I'll be looking at 5 minutes breakout inside of this 1 hour range. Okay, so that's scenario number one. Now the second scenario number two, is when 8 a.m. candle closes below this 1 hour support. Okay, close below here, and if it does, I will be looking into an external breakout play to the downside. Yeah, so this is the scenario number two. The 8 a.m. candle close below the 1 hour support and provides an external breakout play. That's what I wrote. To the downside. The time is 20 minutes past 8. Okay, so that's scenario number two. If price did close below the 1 hour support on hourly, then I'll be looking to sell to the downside to this blue line here. However, if the 8 a.m. candle can't close below the 1 hour support, then I will look into an internal breakout play. So I was So what I did just then, guys, I was measuring the range because for me this is a pretty nice clean range. Okay, so I was measuring the range because I marked this right as a, so this is my empty file. I was just marking up, just getting ready. Okay, so that's my 5 minutes resistance, the clean range. So basically when a price breaks through that 5 minutes resistance, I'll be looking into an internal breakout play because price still within this 1 hour support and resistance. Alright, scenario number 1. 1 hour support is holding price inside the 1 hour range and provides internal breakout play inside the 1 hour range. Alright, it's 1.5 minutes away from this candle closing. So I wrote waiting for 5 minutes candle to close above the clean range line, right? This line. Just getting my MT5 ready. Yeah, so it's 50 seconds away from this 5 minutes candle to close. So just trying to calculate the lot size. Right, 22 seconds from this candle closing. And we are 6 minutes away from 8:30, and normally at 8:30, so half an hour after New York opens, you have a nice early surge of volume coming into the market. Yeah, so price did close. Let me just pause it there. So price did close above that 5 minutes resistance, that line. It's just a bummer that I lost a few pips there because of, I think it's slippage or some, when I pressed the buy button, it it didn't actually close. Sorry, it didn't actually give me the entry here, and which is what I wanted. I probably was late by a few seconds. But yeah, learning from last week, I think it was last week, where I took a loss because the last 3 or 4 seconds so I needed that candle to close bullish because I wanted to get into a buy, and that was a confirmation candle, and I was calculating the lot size and everything, and as I went back to my MT5 and clicked buy, that candle closed bearish just from the last 3 or 4 seconds, which made obviously my trade idea invalid, but it was a little bit too late for that. Anyway, so this time I kind of make sure that it has to close completely. Yeah, even if it means that means I'm going into the next candle by a few seconds late. All right, so that will be my TP. So I'm in the long position. There is going to be an FOMC at 4 p.m. New York time today, or 4 a.m. my time, but that goes on to Thursday already, because I'm in Australia on the other side of the world. Yeah, I'm a session-based trader, guys. So I look at the market fairly simple. I try to make my trading as simple as possible. And yeah, how I see the market is I would wait until the 7 a.m. candle closes and see where my support and resistance are on the hourly. And that will be my parameter for the session, basically, right? And the way I see it is pretty simple. If price is within a 1 hour range, so then I will look into a breakout on the 5 minutes inside that range. If price, because I only trade 2 hours, right? I only trade the New York Open, 8 a.m. All the way until 10 a.m. So I give myself 2 hours window, and if the 8 a.m. candle did not break did actually break a support or resistance, then I will look into an external breakout play, right? So I'll be looking at a 5 minutes confirmation after price breaking at the 1 hour support or resistance, to the next support or to the next resistance. I'm the biggest proponent of not trying to predict what price wants to do the next 4 hours, 6 hours, to the next day, the next week, then the next month. I just try to predict what price wants to do, right? The highest probability, and just try to capitalize on that move. Yeah, that's why, like today, when I came into the market, straight away I come up with 2 scenarios. And by the way, I keep my what do you call it? I keep my scenarios pretty fluid. So if price does this, then I do this. If price do that, then I do this. Yeah, so I try to keep that fluid. That's why I don't, when I say, people say they have bias, I also have a bias, but my bias is probably not as like a typical bias as what other traders tend to use bias for. So I have, I don't know whether you can call it bias, but I just have potential scenarios that might play out for the session. Yeah, so I came into the market, you saw I came up with the two scenarios even before it happens, right? And one of them play out, right? And I already knew exactly what I wanted to do if scenario number one did end up playing out. So yeah, just keep it simple. And if scenario number one did not play out, scenario number two did not play out, then I'll look into, is there a potential scenario number three? And if there is no scenario number three and it's outside of my trading hours, and that's it, right? I close my laptop and walk away and come back again the next session. Which is pretty boring, right? It's not exciting at all. But you can see around, I think most traders that have made it, they did say that once you have that click with the market, once you know your ABC, once you know your setups, once you know what you need to do, it becomes pretty plain vanilla. It becomes pretty boring. And I guess, it probably comes with the territory. If you're already comfortable with your setup, then I guess you don't get as much, FOMO as what you used to, I guess, so which makes it probably less adrenaline, I think. And for me, I don't look, there's going to be a lot of people disagreeing with me, and I know it's actually it will attract a lot of heated argument, and I would probably attract a lot of heat as well for saying this. But for me, I don't let the RR, or the risk to reward, dictates where I enter and where I take profit, or where I actually put my stop loss. I always go by, this is my say for example, I have a particular setup, and my setup, I've tested that, because my take profit is based on a reference point, so not based on a fixed risk to reward, or not based on a dynamic reward where I just kind of keep on trailing my stop loss and see where price takes me to, right? I don't do that. I'm not saying that's actually the wrong way of trading. I'm not saying that at all. I'm just saying I use a certain reference point as my take profit, because for me that is the most highest probability if I were to enter from A. B is my highest probability exit point, right? And I would take B as, I would put B as my take profit, and my stop loss would be the lowest probability for price to want to go there, right? And by the time price wants to go there, that means it is completely the wrong trade idea altogether, right? So for me, sometimes I do take 0.6, 0.5 RR, risk to reward, which is a negative RR, but I'll take it, right? Knowing that it's actually a high probability setup. But I don't shorten my trade. Say for example, my reference point for my TP will give me 1 to 1, right? I don't go and make it shorter to 1 to 0.5 to make sure that I get even higher probability. No, I don't do that. I will stick to my reference point for my take profit, right? So wherever it may be, it could be 2, RR, could be 3 RR sometimes, and it could be 0.9 RR. I will still take it for this setup anyway. So if I were to develop a third play or a third strategy, fourth strategy, that gives me so there you go, TP hit, that gives me a different reference point, which might give me a better RR, so be it. So it doesn't matter. Yeah, for me, like I said, it just I'm not too fixated onto risk to reward, right? If I know it's a high probability setup, so tonight I just took 0.5% from capital in profit, and that's it, right? In is a 15 minutes, what do you call it, 15 minutes trade. Didn't stress out too much about it, didn't spend a lot of time analyzing all these liquidity points and this and that and this and that. Yeah, it's pretty straightforward, and it's an internal breakout play, right? Price scenario number 1, right over there, right? Price is kept within that 1 hour range, right? So that 1 hour support did hold price. Yeah, so it was just a quick scalp. All right, so now I probably can show you. So let me just wait until this is completely finished. Okay, the recording here. So I put 50 minutes straight. So price continue moving higher, right, after my TP, right? Okay, so that entry point, exit, that's my MT5. All right, so that's that. Let me just take you to trading view. All right, so this is right. I mean, you can still see the comments here. That was from the comments earlier before, but I just want to show you this. Price did actually end up breaking the 1 hour support, but that is the 9 a.m. candle. By the time this close, and it confirms that I can sell into that blue line there, but it's already, been and gone. I can't take anything. It's already been violated, that take profit point. What I wanted to show you was this, right? Okay, that is my reference point, okay, for a reason. Yeah, so I've tested it the way I look at, okay, once I see a potential scenario, I'll play, and then I see a confirm. So the play was, but the potential scenario was scenario number 1, yeah, was price on the 1 hour was holding right at this 1 hour support. Okay, which is here, yeah, and then this is my setup. Okay, so that was the scenario. Okay, and I saw a setup occurring, right, where it created a 5 minutes resistance, and price met with 1 hour support. The 1 hour support won, broke the 5 minutes resistance, and that was my entry. Okay, and then on to the left, all right, once that setup happens, to the left I can see a clean range, right? There's not many roadblocks, right? The little 5 minutes resistance here and there, like between this one and this one. The next one was this one, right? 5 minutes resistance. Price broke this 5 minutes resistance. The next reference point for my take profit was, when I want to get out, was the next 5 minutes resistance, right? Easy, right? From resistance to resistance, from key level to key level on the 5 minutes. Now, like I said before, you can argue that, oh, well, it's a negative RR. Why did you take it? I didn't create the strategy to get a negative RR, right? I create the strategy to see the most highest probability trade where I can get from point A to point B. So this is a high probability for me in my head and in my eyes, and this is what I believe, right? This is for me. It might not work for you. Now, just want to show you this, right? Okay, from this resistance to that resistance is, what's this? What, 20, 23? Sorry, not that one. So from this resistance all the way to its maximum travel, right? So from when price break that, so from that resistance all the way to where price was at its highest, right? During my trade, it was 33 point, I don't know whether you can see it, but it says it's 33.7 pips. Okay, so from that resistance all the way to the highest point was 33.7 pips before it reverses and just fell. Okay, fell hard. Okay, hard. Okay, let me see. I think this is a good, like 200 pips, I think. Let me see. Very close, 203.6. Okay, very close. See, I know my pair. I know US30. Okay, right. So 203 pips, right? Fell really hard. Okay, and it's almost, there's no resistance until, I mean, there's no resistance from keep on going lower until it reaches the next strong 1 hour support that coincides with 4 hour support, which I said earlier in this video. Okay, so it started kind of slowing down. Okay, started going sideways. My point is this: we could argue until the cow comes home, but my point is this: price traveled from here to the highest point. It was 33 point something, yeah, pips. I got to capitalize, right? Oh, sorry, from the confirmation, 18 points. So from the maximum travel, right? The maximum distance that price traveled, I capitalized 18 out of 33, right? So 50% out of the move. Okay, for me, I think that's pretty good, because if I started tinkering around with, oh yeah, well, I know it has been tested, by the way, obviously this is why I took this as my TP. If I started tinkering around with, oh, maybe I could take the TP a little bit higher, or maybe because price has been bullish, it did break the all-time high yesterday. I think it's time for price to continue to make new all-time high, right, on Wednesday, today. Well, nobody knows, right, until it happens. So for me, do I say if I see this, I'm happy, right? Okay, I'm not saying that I'm not happy if price did end up traveling 400 pips, going higher. I'm just saying I'm very happy to see this, because, well, look at this. So that means I'm just only missing at, what was it, 9.8? 9. Yeah, so exactly 10 pips. I only miss out 10 pips. It doesn't bother me. Okay, but one thing I know is, I know I don't miss out on a trade because I go on market order. I don't go and put limit order here to minimize. So, some people, they like to put a limit order. They hope that price retrace back into an area, and then before it takes them to the TP, right? So then what they're doing is they reducing their stop loss, making the stop loss smaller, and therefore increasing their risk to reward, which is just another type of or style of trading. So it's okay, it's just a different strategy. But for me, the what do you call it, I would never miss out on a trade. Once I see a final setup, once it gives me a confirmation, I will never ever miss a trade unless I am away from the desk. If I'm in front of the screen, I will never miss a trade. But I need to pay that by lowering my risk to reward because I'm entering I'm executing the order straight away, right, with the market order. But if I were to put limit order, okay, I will get a better risk to reward. I can make my stop loss or risk smaller, but there's a chance that I would miss out a trade. I could get the right trade idea, I could get the right setup, but I still miss the trade. It is still possible. Like I said, there's no right and wrong. Some people prefer to have a really good RR, a high risk to reward, and sometimes miss a trade, or sometimes they are missing few trades here and there. I prefer never to miss good trades and pay the risk to reward. Okay, and again, it is up to me. If I get, say, for example, something stupid like 0.1 RR or 0.2 RR, it is up to me. It is my discretion to say, you know what, I think it's not even worth it. Okay, I'm gonna skip it. It's fine. Yeah. Anyway, so that's a wrap for today. What day is it today? Wednesday. Yeah, I'll see if I do another live recording again tomorrow, because normally Thursday I am usually out. So yeah, well, it's FOMC, guys, by the way. It's at 4 p.m. New York Standard Time. Okay, well, happy trading and stay well, guys. I'll see you tomorrow. Thank you for watching, guys. If you find this video useful, hit the subscribe button and don't forget to like, comment and share. Make sure you check out my other videos too.